What is going on, everyone, and welcome back to Explain the Charts. Today is October 31st, 2025, and we are doing an in-depth analysis of Amazon, ticker symbol Amazon, following its blockbuster third-quarter earnings report that was released after the bell yesterday. The market is reacting in a huge way, so let's first dive into the news that is causing all of this excitement. Amazon absolutely crushed Wall Street expectations, reporting earnings of $1.95 per share against a forecast of $1.57. The real headline grabber, however, was the performance of its cloud computing division, Amazon Web Services, or AWS. AWS sales grew by a massive 20% to $33 billion, a pace of re-acceleration that most analysts didn't see coming until 2026. This single data point has eased major investor concerns about AWS losing market share to competitors in the AI space. CEO Andy Jassy directly credited strong momentum from AI-driven improvements and robust demand for AWS core infrastructure. As a result of this stellar report, Amazon stock rocketed more than 10% in after-hours trading yesterday, jumping from its close of $222.86 to over $246. This has led multiple analysts to raise their price targets, with firms like Wedbush and UBS now targeting the $280 level. Now, let's turn to the charts to see what this means from a technical perspective. Looking at the daily chart, we can see the price action leading up to this event. For the last month, Amazon has been trading in a volatile range, generally between $215 and $235. Yesterday, on October 30th, the stock closed down nearly 2% at $222.86, showing significant anxiety heading into the earnings announcement. That apprehensive close makes this post-earnings surge even more dramatic. The expected open today will create a massive price gap, a powerful technical signal known as a breakaway gap. This move smashes right through previous resistance, including the prior all-time highs set back in early February around the $242 mark. When a stock breaks into new all-time highs on the back of overwhelmingly positive fundamental news, it enters a phase called price discovery, which is an extremely bullish sign. The old resistance area between $238 and $242 should now be considered the first major support zone on any potential pullback. To get a better sense of yesterday's price action, let's switch to the 15-minute chart and zoom in on the exact moment the earnings news hit the wire. Here we can see trading was quiet heading into the market close at 2000 hours Universal Time Coordinated. Then, in the very first 15-minute candle of the after-hours session, we see this monumental explosion in price and volume. The stock gapped up from its closing price near $223 and shot up to a high of over $247 almost instantly. This shows an immediate and aggressive wave of buying as algorithms and investors digested the positive report. Following that initial surge, the buying pressure continued throughout the evening. The price ground its way higher, eventually peaking at $255.55 before pulling back slightly. This after-hours high is now a critical short-term level to watch. Now, let's pull back to the 1-hour chart to frame our expectations for today's trading session. This chart really puts the scale of this gap into perspective. The price is opening far above any trading that has occurred in the past several weeks. For today, we should anticipate significant volatility. There will be traders who bought yesterday looking to take profits, which could create some initial selling pressure. The first test for the bulls will be whether the price can hold above the initial gap-up level around $246. If it can establish a base there and begin to move higher, the next target will be that after-hours high of $255.55. A break and hold above that level on high volume would signal a strong continuation of this new uptrend. Conversely, if sellers take control at the open, the first area of intraday support to watch is that $246 level. A failure to hold that could see the price drift lower to test the major breakout zone of $242. So let's bring it all together by looking at the daily chart one more time and discussing the possibilities going forward. The bullish scenario, which I believe has about a 70% probability, is that the stock uses this earnings catalyst as a launching pad. In this case, we would see the price consolidate its gains above the $242 breakout level and begin a steady climb towards those new analyst targets of $270 and beyond. This scenario is reinforced by the powerful combination of a fundamental narrative shift and a technical breakout into new all-time highs. A more bearish, short-term scenario, with perhaps a 20% probability, involves a gap and fade. This would happen if early profit-taking is heavier than expected, pushing the price back down below $242 and potentially even trying to fill a portion of the gap. A move back below $238 would be a significant red flag for bulls. Finally, there's a small 10% chance the stock simply moves sideways, consolidating in a tight range for a few days as the market digests this massive move. To quickly recap the key levels to watch, our new major support is the former all-time high zone of $238 to $242. Below that, the top of the gap is around $223, although a retest of that level is unlikely without some new negative catalyst. To the upside, short-term resistance is the after-hours high of $255.55. Beyond that, we will be watching for psychological levels like $260 and the longer-term analyst targets around $270 to $280. The story for Amazon has clearly changed for the better overnight, with both fundamentals and technicals now pointing to a very strong upward trend. Keep a close eye on volume today. High volume on up moves will confirm the bulls are in control. As always, this is not financial advice and is purely for educational purposes. You should always conduct your own research and due diligence before making any investment decisions. Thank you for watching Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to the channel, and let us know your thoughts on Amazon in the comments below.